Hi, everybody. Morning. Our next panel is build versus buy. Now, this topic is a perennial topic. However, as things change, we know that we have to pay attention to what is needed for compliance, for improving access, speed to market, and everything in between. Some of the questions that I've been asked recently was more about, well, if we build it, it's going to cost us. If we outsource it, well, it won't be a CapEx. It'll be it'll be an operating expense. I think the gentleman to my side here will have a great discussion on this topic and bring it a lot deeper than I'm just talking about it now. So I'd like to bring up the moderator, Dan Kusalovic. He's available. If not, I will be glad to start and do this ad hoc. Okay. Now, I haven't really had a chance to speak with these individuals, but I do know some of them well enough that I think they can bring a lot to the table. Or I know they can bring a lot to the table. So let me introduce the panelists first. We have Mike Madigan with WH Trading, Thomas Stranz, Archelon Group, David Becker, Chicago Fundamental Investment Partners, Sonny Baillargeon, Pico, Quantitative Trading from my hometown, and Mike Persico from Anova Technologies. And here is our moderator.
Oh, thanks. So, my name is Dan Kusalovic. I'm Director of Marketing in charge of Financial Services vertical at Intel. Really glad to be here. So, I have a pleasure of hosting this panel. And I would like to start, with our panelists basically introducing themselves a little further. So, Sonny, do you want to?
Yeah. Hi. Sonny Baillargeon from Pico, Quantitative Trading. We started out in 2009. I'm the CTO, providing low latency technology services, colocation market data, and managed services around electronic trading. Thank you.
My name is David Becker. I work at Chicago Fundamental Investment Partners. We're a hedge fund that started in 2006. At this point, we primarily are focused on collateralized loan obligations, so we're trading mainly bank debt. So kind of have a little bit of different perspective than my other distinguished panel members.
My name is Thomas Stranz, Archelon Group. We've been in business for about 25 years. We're a proprietary trading firm, market maker, present not only in the US, but also in Europe and Asia.
Mike Madigan with WH Trading, a proprietary trading group based in Chicago. It's been around since 1994. Started off, obviously, as an open outcry, and we evolved into having a global electronic trading presence, Europe, US, and Asia.
Hi, Mike Persico, founder of Anova Technologies, and we're an exchange-to-exchange connectivity provider, and the transport mediums we use to do that are fiber, radio frequency, and now free space optics or lasers. Thanks.
Okay, great. So today's panel is on build versus buy. And I would like to start this discussion along those lines. So basically there is this fundamental shift in the industry. It used to be a lot of the stuff was being developed in-house for both business reasons and just perhaps the expertise wasn't present. So could you comment on how you see from your perspective, your particular company, this process evolving at this point? So Sonny, do you want to get going?
Yeah, I guess coming from the buy side of the build versus buy, we see a lot of technology focus groups, especially in the last 2.5 years, who have used technology as part of their IP and their alpha generation. That's an awesome ringtone, by the way. Good job.
Thank you.
going to these groups and having this build versus buy discussion, you run against a lot of smart engineers. And what we're finding is, with kind of the market volatility where it is, where the volumes, where they are, they're looking at other avenues to reduce their fixed cost, right? And that fixed cost is extremely high. Exchanges continue to drive up market data prices of sessions. Prime brokers are being squeezed because they're obviously commission-based. So everybody's trying to squeeze out that penny. And how do you do that? If your top line's not moving, you try to lower your bottom line. And that fixed cost area, has become somewhat of a utility in the past few years. So we're actually seeing a lot of interest where groups have traditionally been very technology focused, actually look to us and say, hey, where can we augment, go into a hybrid model where we do some things or we deliver data, something simple as delivering data and providing vendor of record savings for these guys, to help mitigate some of that risk and their fixed costs.
So our firm, really from the beginning, has been very much a proponent of the buy in this dichotomy. That's primarily driven by two things. One is technology is really not what generates our alpha. We're a fundamental research shop. So strategically, it kind of made sense for us to outsource what we could. Also, I'm lazy, so I didn't really want to build stuff in-house. But one thing that's kind of changed over time is not our position there, but really after the 2008 turmoil, the margins that we were seeing really became a lot tighter, which is not unusual, and there was a lot more pressure to have cost cutting. And so we've probably even picked up on the buy side of things to the point where we're considering outsourcing our back office even. Again, it's just not something that generates alpha for us. There's plenty of providers that give great quality on that kind of work, so we see ourselves moving even more in that direction.
I have to say that we started on the other side. We started on the build side. With the great people we had working for Archelon, we thought that we can build it, we can do it better, we can do it faster. And we did. A lot of times we did make it better, did make it faster. But the cost of doing that and the cost of maintaining that quickly caught up with us. Especially with these markets where the edges are getting just smaller and smaller, where the fees are getting higher and higher, where regulation being more expensive. There isn't much room anymore for the build part and for the maintenance part. There will always be a part that we're going to always build. I mean, you got to have your edge. But thinking about it and looking at some of the great technologies that people are doing out there, there is no real reason for certain things to be reinvented. And finding those reasons, finding those companies that can provide the best services is, I think, the name of the game these days. There are a couple of great vendors that I had the pleasure of working with, and it's a whole different world for me.
Hey, Thomas, I actually have a question. So you say the environment is getting tighter. Do you see the business drivers, such as more regulation, being more important, or there are some technology initiatives or inflection points, such as big data or software-defined networks, that are driving, your decision to kind of go more towards outsourcing?
I mean, of course, we can't develop everything. There are technologies out there that need to be leveraged. There are things out there that need to be picked up. With regulation, yeah, there are ways we can outsource certain regulation parts. Mm-hmm. There are ways we can outsource certain rules of what we do and how we do it. And that is, with experience, that is much cheaper than trying to do it ourselves.
I'd say there's, like these guys said, the last few years have been tough on the industry in general, with volumes going down and volatility going down. So pretty much the whole industry took a step back and said, you know, we've got to cut our costs. And what is, you have to look at things and say, what is critical to our business for us to make money? And things that we had done in the past, not literally building our own network, but, you know, setting up the networks and the data centers and such on our own and being in full control of them, we took a look at that and said, you know, maybe we shouldn't be doing this. And it's really expensive to have a gig line over to Asia or over to Europe, and there's lots of other people already doing this. I think the other thing that happened in the last, I don't know, 5 years or so is, if you look back when spread networks came in and put in the really low latency line to New York, certain big players in Chicago and such jumped on that right away and paid a lot of money for that. And within a couple of years, you know, the price of that came down significantly, such that people like us could you know, get on that same line and have you know, another millisecond latency higher because they'd spool up the cabling for us, right? But at a fraction of the cost. And at the same time, there were other people that came in, like data center providers, that started catching up with the people that were building it themselves. So everybody a few years back was buying all the Arista switches and so forth. Well, now you have data center providers who are offering that same level of sophistication, and then you got to ask yourself, well, if I don't need a full rack in Europe, I only need a couple of servers over there, why am I building this big network and this big, you know, spending tens of thousands of dollars on buying this capital equipment and having the staff that has to maintain that, when I can go to a provider and buy it from them for a fraction of the cost? The downside to that is you lose some of the visibility into the network, and but you know, if the markets are so tight, you're struggling to make money, you got to do what you got to do.
So, but do you think the providers are actually also getting better over the last couple of years?
Absolutely.
In terms of reliability or performance?
Yeah. Yes.
So, you know, when we look at this, we come at it from a little bit of a different angle, and that's, how does it transform your business when you're done, whether you've built or you've chose to buy? Because sometimes there's always consequences, and some of them are unintended. And if you choose to build it, well, now you've got IP, now you've got assets, now you may have patents. Are they defensible? Do they add value to your firm, or is it just clearly an alpha differentiator? And that's a very hard thing to quantify in the beginning. There's a real leap of faith when you go in and decide that you're going to do that, because you can't model that. And so, you know, it always costs 3 times more and takes 5 times longer. So, you know, but if that's what you want to be, if you want to be a firm that builds and accrues assets, and that's part of the value of your company, then I think build makes a lot of sense. But the consequences to that are, okay, let's bring FPGA in-house. That sounds really good. We've got some great developers. We can push them over to that side of the house. And okay, so now your board isn't working, and now you have to bring in an oscilloscope, and you've got jitter on it, and now you're tuning each port on a case-by-case basis. Guess what? You're a hardware firm. Do you want to be a hardware firm? You know, if you decide to build your own networks on the wireless side, now you're a carrier. You know, do you want to be a carrier? And so to me, it seems like yes, the means are important, the initial decision is important, but the consequences and what you want your business to be, you know, once you're finished is almost more important. Do I want to be a trading firm and a technology provider, a hardware provider, a wireless carrier, or do I just want to be a trading firm? And so, you know, looking a few years in the future when all that building is done, probably makes some sense. Now on the buy side, you know, you're using the same things your competitors are. And so is that okay? Probably if things are commoditized and you're getting market data, You know, that's a commoditized service, and there's, but maybe you do have secret sauce. So I think it's an individual firm by individual firm basis, the decision.
Okay. So I would like to stir discussion in direction of finding this balance between achieving these benefits in terms of the savings, first and foremost, but also, at least as perceived, giving up some of the control and security aspects of this whole move. So, I mean, if you can, offer us your thoughts on that, that'd be great. So perhaps you can start, David. Unless, go ahead.
Sure. Yeah, so that's it's a topic that occupies a lot of our thought, right? So strategically, we've always been comfortable with the idea of buying, but the downside of that is you're giving up control of security. You have maybe costs that are unintended or outside what you normally think of. Switching costs, you're locked into a vendor potentially. Managing the vendor, those kind of issues come up. So those are maybe quantifiable. The security thing is something that we think about a lot. It's obviously a big topic for the SEC these days. For us, the issue of security, so for example, we have, our disaster recovery is hosted somewhere else. Our exchange server is hosted somewhere else. So our file server, we have in-house, but there's copies of it elsewhere. There's questions about, okay, are we going to use a technology provider that's giving us a shared infrastructure with other people? Do we want to pay more so that it's a private thing? And then how do we get comfortable with what their security policies are? How do we monitor that they're compliant with everything that they said they would do? So one approach we've used for that is to try and work that into the contract, which some vendors are very amenable to and others not so much. Sometimes it comes into the SLA, which to me has kind of limited value, because if there's some big security breach which ruins our reputation, then if they're rebating that month's fees, that doesn't really matter. But so we've really focused more on the contractual changes that we can do. Can we have the right to do a security audit of them, pay a consultant to come in and test their network for intrusion, things like that. So it's something that we constantly battle, because some firms we feel very comfortable with in that way, but others, we've decided, okay, well, they're certified that they're compliant with some of the ISO standards, but ultimately we're just believing that they're going to maintain that and do what they said they would do.
Okay, so basically you don't go too deep into technical details how the providers are,
Well, it depends. I mean, some are very open to that. I mean, they'll all kind of give us what their plan is.
Okay.
But to me, it's really about, okay, but if we're not able to see the same kind of reporting that they're seeing, okay, how did the results of their intrusion tests go, and can we get a monthly report of all the stuff you've looked at, things like that. If we don't have that same kind of oversight of their compliance, then we're really just trusting that they're doing it, versus others that are willing to kind of share that with us and let us see the same monitoring tools that they're using.
Okay.
See, I do like to get into the detail with the vendors. When there's a product that I'm interested in, the vendor has, and Rackspace is I'll use that for an example. As opposed to hosting our own racks, by getting our own hardware, talking to the vendor that will just give me the power, the cooling, the real estate, that's very easy, and there's not much security or anything else in that. But what happens to the data after it leaves my servers and goes into their cloud? I do care about. And there are other tools out there that will help me figure out certain aspects of latency or anything like that. Discussions with the vendor as to how my packet traverses, through what equipment. I've seen that a lot of the vendors are very responsive to these questions. One vendor I asked, okay, I want to know exactly what hardware my packets go through. And I was given the models of the switches that data goes through. At that point, I questioned certain things, I asked certain things. Why is it doing that? Why is it not doing that? And we worked together. And I think more and more vendors out there are, at first, to me, it was a surprise, are very responsive to customer comments, customer wishes, customer ideas. Because at the end of the day, we're out there in the front lines. We know what's going on. We are using the hardware, the software, the lines. We're using it every day. And they're more of a provider, and they need input from us. Now, certainly, you're not going to give away your secret sauce. If you think you have an edge, you're not going to tell the vendor how to fix it, because if he fixes it for you, he's going to fix it for everybody else. But there are certain things that just make sense. And maybe for reliability more than advantage of speed or anything like that. And I believe that this should be more of a two-way street. That it's not only vendors coming up to us and saying, this is what I have to sell you. Well, it's more, that's great, but how about we talk about this and that? And like I said, the vendors I've been working with are very receptive to that.
Okay, that's actually great for me to hear. I mean, selfishly, coming from Intel, so security has been one of the anchors for us last couple of years, actually even more, but last couple of years really big, and especially in this vertical. So we're building these features and hooks in the hardware, end to end, trying to enforce. So when end customers are asking about that, that's music to my ears. Thanks, Thomas.
Go ahead.
Yeah, so I'm kind of echoing the same thing, but the way I look at it, there's a couple of parameters, right? There's the cost. There's got to be a significant cost savings if I'm going to do it. There has to be reliability and comfort with the vendors. I mean, we've had some vendors in the past that I just would simply never do business with again. Right? So you've got to be comfortable with the vendor gives you proper support, not just the support when there's a problem, but gives you the necessary feedback, like Thomas was implying, the appropriate monitoring tools. Because as soon as you turn part of your infrastructure over to a vendor, you no longer have the control or the visibility that you had when it was your own. When we owned everything at all the data centers and stuff, we could get onto the switches, we could see exactly what's going on. And it's a little bit scary when you turn that over to somebody else, because they've got to be a reliable partner of yours, so you've got to be very comfortable with them. One of the other problems with sharing the infrastructure is, if I go into a shared data center, I have to somehow be reasonably confident that the guy who's supplying these services isn't overtaxing things. He's not overtaxing the connectivity to the exchange. He's not putting too many guys on the system. If somebody on that same shared infrastructure, be it the switch or the connectivity of the exchange, has some runaway algorithm and he's bringing the thing down to its knees, I get impacted too, right? So it's a tricky business because you lose the control and visibility, but at the same time, cost plays into that, right? And part of that cost too depends upon, at some point there's a tipping point. The vendor's got to make money, right? If I go to a shared rack, he's going to charge me so much per U and so much per switch port and something for the exchange connectivity. If I have a couple of servers in there, 6 servers, whatever, I'm probably saving money. If all of a sudden I have 30 servers, I'm doing really well at this exchange and I want to put a bunch of servers in there, then all of a sudden I can do it cheaper myself, right? So you got to kind of look at the whole picture and see where that tipping point is and be able maybe to project a little bit in the future. What do we think is going to happen here?
And I almost think there's a hybrid model here. There's, if you're looking to go and buy and a respective vendor has a product sheet or a set of services, I can say from our perspective, there's always a custom part. We may look and feel like a carrier, but I kind of put us more in the engineering firm category. And so, there's a custom piece that we can work with, as you say, Thomas, feedback from people to say, that's great, I see how you're doing it here, can you tune this, can you change this? And I think as a vendor, you have to be flexible in that regard, because it really isn't a one-size-fits-all world we live in. And then in terms of, contracts and SLAs, I think in today's marketplace, you have to be more flexible than ever. People are seeking shorter contracts. They're looking for latency outs. They need to maintain the cutting edge, and you should be able to offer that as a vendor, because you know what? It doesn't matter if your contract's 3 months. If your product is the best, people will stay. And so that is what is the stickiness, and that's also what forces you as a vendor to continue to innovate, to continue to improve, and you don't get static. And so, the shorter contracts, the latency outs, those type of things, it actually works to keep you sharp as a provider. And so, those would be my comments to this, and it's a changing marketplace in that regard.
If I may comment on the last part that you said, shorter contracts, more flexible contracts. To me, that's huge, because one way, if I want to get into a new market, my option 1 is build it, super expensive. Option 2, sign a 3-year contract for me to try this exchange. Well, that's not going to happen. If I negotiate with the vendor a 1-year contract, of course we offer one-year contract, but it's going to be 75% of what the 3-year was. Well, that's not going to fit either. So very quickly, we have to abandon the idea of getting into a new market, where if there is a way, of course there are costs of you providing a equipment or anything for me, but if I can try it for 3 months and figure out a way that compensate you for the build out or whatever else it is, yeah, if you're saying it's going to work, then why would I leave?
Right.
Exactly.
And we'll offer people a month trial, cover my provisioning install costs, and test it out on your P&L, right? That's the best way to do things, because then they're going to know if it makes them money, and then they're going to be a long-term customer. So give a little bit on the front end, get it on the back end.
I just want to comment. I agree with these guys 100%. Back in 2008, 2009, when things were great, nobody had any problem signing a 3-year contract. Now, I don't even want to sign a 1-year contract. And it's not that I'm not going to be there for a year, but it just made everybody real skittish when the market collapsed and you're trying to squeeze every dime out of everything. If you're with a good vendor and the economy isn't completely collapsed, you're going to stay there, right? But it gives me some comfort in having the flexibility of not being locked in.
So I think this is a great segue into a question I wanted to ask. I mean, is there like one characteristic or a feature, or maybe 2 characteristics of an ideal vendor for you? So looks like flexibility in terms of the contract.
I would echo what Thomas said too. And this isn't just about data centers. This is about if I want to get into FPGA or whatever, I want to try out a new technology. And a lot of these things are pretty expensive. And I can go to the owner of my firm and say, I really think we should do this. But he's going to look at the costs and say to me, turn it around immediately and say, okay, we can do this if you can guarantee me I'm going to get 2x in return, right? Well, that's tough to do. So to that point, a good vendor who's confident in their product will give you the opportunity to test that for a month or 2 or whatever, and maybe there's some upfront costs like Mike suggested, but I'm way more comfortable with that. And also, they won't lock you in. If their product, somebody does something better, their product, you're not forced into paying them for 12 months when their product no longer performs.
If I can just say 3 words on your question.
Okay.
Flexibility, transparency, and customer service.
Okay, great. Hopefully all the vendors in the audience taking notes.
Well, I am a vendor. And I'm really glad to hear this. A couple things. Again, we're on the, you would outsource some of this technology to us, right? and a couple things. One is, it's not good enough to be a tech vendor. You go out and buy an Arista switch. You go out and buy Colo. You got to know how all these pieces fit together, right? And it's not just getting that. So Pico, as a company, goes out and gets all this stuff. We'd offer month-to-month things, and partly because people don't know. People don't know what the market's going to look like. If they're going to do it on their own, minimum is 1 year, right? So you're going to go out, get all these circuits, and Colo's the cheapest part of the equation. You can go to Equinix and go to these racks, colocation sites, and get a rack tomorrow. That's the cheapest part of the equation, right? So it's the switching, it's the telco, it's the exchange connectivity. Anybody know how much a 40 gig LCN connection to NYSE is today? 20 grand a month for one. And you need a backup, right? And you need the switching and the technology to support a 40 gig connection, right? So it's not like those things are very cheap. And that's one exchange, now multiplied by the other lit exchanges, right? Multiplied by the options exchanges. I think CBOE has a fast 10 gig and a slow 10 gig. NYSE has 10 gig ultra and a slow 10 gig. There's multiple options at every exchange, and how do you navigate through that? And one thing, Pico is an agency broker-dealer. We do have a trading business that we perform 15C35 risk checks. We looked at FPGA for that. We looked at software providers for that. But one thing, having this business, which is a small part of our business now because commissions are so low, and guys who trade a lot of volume have really thin commissions. We're that much closer to the business, right? We have that domain knowledge, right? So if you call us at 9:29, we're going to drop everything to make sure that you're up by 9:30. That's Eastern time, by the way. You call up other tech vendors, and they're a tech vendor. You're calling level 1 guy, let me fill out a ticket. It's like 911, right? You hear about 911 recently. You get asked 20 questions before somebody helps you. You don't want to be in that situation. You want to be, I have an issue, it's going to open, I need to trade. And that's something that I think, as a vendor, you want to look at as well. Definitely transparency. We were presenting to a fairly large hedge fund here in Chicago. We whiteboarded our network architecture, and the head of networking goes, that's exactly the way we do it. Exact same switches, exact same hops, exact same network connectivity. So to their point, it's control. How much are we losing? Where's the transparency? We went out and bought a Corville for every data center. And now we can provide Corville access to latencies. There's nothing to hide. We're all engineers here. If there's an extra hop, it's going to add latency, and you're going to know about it. So having that knowledge, not only providing good technology, and the technology may not be a differentiator. It's really the service and the transparency that I think will get people to understand that more and to be comfortable with that and saying, you know what, our trading plant, really our algo, really the alpha generating our profits can live in somebody else's space. And you know what, we're going to benefit from the shared infrastructure, right? Like how do we know that our 40 gig LCN connection isn't being monopolized by 1 or 2 sessions, right? And to that end, if you ever look at bandwidth utilization, the exchanges will throttle you before anything else, right? So before, a lot of the bandwidth concerns were around market data. Through our Corville device, we saw we were getting 14 gigabit microbursts over our 40 gig LCN that was causing issues on the 10 gig switches, right? You can't fit a 14 gig data into a 10 gig port. But again, we told our customers, listen, we saw it on Corville and we're going to fix it. And we did. But those types of things, we were able to do very quickly. And I think our customers appreciate that. And I think if you were a larger firm or a firm with a little more bureaucracy and you had to get budgets approved now, and it's a different story. So people want us to be nimble, want us to implement technology much sooner. For instance, for Intel, when they come out with a new processor, when Haswell came out, or is coming out, right? Most of these bigger banks have a 6-month engineering cycle. So day one it's out, HP or Supermicro or Dell or whatever IBM, whatever servers you use, they're there day one. But then it goes into an engineering group, right? And the engineering group sits on it for 3 to 6 months. And then you have to procure it. And now you have maybe another 1 to 3 months of procurement and budget approvals. And by the time you get it, you're 9 months out, and they're 3 months away from the next thing. So you're already 9 months in the hole, 9 months behind. So
We're really getting close to the time. So great discussion. I would like to maybe open to 1 or 2 questions from the audience. To close with. So any questions from the audience for the panel? And sorry if I don't see you. I mean, this reflector is driving right into my. Sir.
What keeps you all up at night?
Actually, the cooling of my air conditioning room, because it's the having the environment up, things like that is what keeps me up at night. And this is exactly build versus buy. It will be somebody else's problem, Equinix's problem.
Yeah, I would say, everyone on the trading side feels like they're in an arms race sometimes, and so do we. And so what keeps me up is, just because you've achieved pole position with a particular line or a particular service, it doesn't mean that there's not people right behind you. And so I worry about Anova 2.0. Because if I'm not constantly evolving, there's someone else right behind me who is, and now we're not relevant. And so that's my biggest concern, and that's why I drive the firm in the directions that it goes in.
I think recently with all the Flash Boys noise, a lot of regulation, a lot of knee-jerk reaction. If they, say that it's illegal to co-locate, that's going to hurt a lot of people. The Attorney General in New York was going to look into co-location. Well, guess what? Open the doors, you're going to see everybody there. Mom and pop's not going to be there. Mom and pop doesn't trade at the exchange. People are naive to think that your pension funds are going and trading against HFT. It's simply not the case, and maybe that's a different panel discussion, but regulation, if they have some knee-jerk things, if they, it's going to hurt a lot of businesses, especially mine, and then makes that real estate around the co-location that much more valuable. You're going to be buying houses next to, NASDAQ in a really bad neighborhood just so you can put your servers there, right, and have a mile of fiber instead of something else. So.
For me, it's my kids.
Good one.
Your kids
good one,
up
David.
too. So. No, I'm just kidding.
But it's actually similar to Sonny's, but regulatory issues, although it's more related to, there's a lot of regulatory stuff going on around CLOs, which is what we trade. So that more than technology.
So any more questions from the audience? And I saw the sign, we have 5 minutes, but it's really hard to see, with the slide coming here. So any more questions from the audience?
So
Please.
we see so there's a great benefit to the economy of scale that a provider can offer to the various clients out there. There's many benefits which include, well, real estate in your office. I assume it's also disaster recovery as well, because you can be in a different location, and the mobility of your capability as well to monitor anyway what's going on. Did any of you see a large interest post Sandy? Because I worked downtown on 20 Broad Street, and I got to Water Street was destroyed. Part of Broad Street was destroyed. Many companies, Verizon for some reason had everything in the basement next to a river for some reason. I kind of blew my mind. Anyway, so with those issues, have you seen